Good day, traders. This is Richard K from Price, Action and Income, and welcome to our first live YouTube session, which we are planning to host every week, Wednesday from now on, every week. So something new we're going to try out. Generally, we had videos uploaded about once a week. I do think that these live sessions will be a bit better. Also give opportunities to you guys to ask any questions that you might have. So during these sessions, I would like to provide an overview of some of the major markets that I follow, and also give you a sort of an insight of where I believe markets are moving towards, where they're going to find possible support resistance, maybe even some major turns that could be, close to materializing. So, but before I begin, I'm going to be looking at quite a few markets here. You've probably seen that in the welcome email or the email that we sent you guys. But before I begin, just remember that all views and opinions are my own and they do not constitute any trading advice. Okay, so on today's agenda, we're going to be looking at S&P 500, which you got on the chart here. I'm going to go through all these lines. It might seem confusing to some of you guys, but I'll try to explain that as well as I can. We're going to be looking at the dollar index. I would like to look at gold as well, crude oil, some major movements that we've seen recently, and also give you a little bit of a trade idea, which we're going to try to do once a week with these sessions, and see if we can actually get some trades going there with that. We're going to be looking at natural gas on that one over there. Right, guys, so once I'm done with the explanation, I'll give you a bit of my bias on all of these markets. You can then ask questions. I do have Nathan manning the chat box at the moment, so you're more than welcome to blast some questions there to him. For today's session, because it's our first one, I would prefer just to have questions regarding the markets that I'm currently showing you guys. I'm going to show you today. And if there's enough sort of interest in other markets, then don't be shy to post that in the chat box as well. And then during the next session, we can definitely have a look at them. Right, guys, if you're new to my channel, my name is Richard K, and I am a big fan of market geometry. You might have noticed on these charts that I use pitchforks. It is a market geometry tool that I use in all of my analysis. Now, some might say this might be a subjective sort of technique, but obviously if you use it in a systematic way, which I tend to do with my members, then it can really give you good insight as to where market might move to, where support and resistance might step in, etc. And obviously I do also have a strategy that if you guys are interested and you're new to this channel, you can have a look at. There's probably going to be a link in the chat box soon, that if you want to go and view that and actually see what else I do offer some of my not some of my members, but if you're interested in this sort of analysis. Guys, here I have a standard pitchfork on the ES. I've drawn this pitchfork towards the end of 2020 already, and it's a standard pitchfork. It's sloping upwards, and I use 3 anchor points. Obviously a beginner anchor point, which started, and this is obviously on a weekly time frame, that I started on the 21st of October. Obviously this is a week, so in October 2002 to that high in October 2007, before the housing market collapse in the US, which was a recession. 3rd anchor point in March 2009. Now obviously one can argue that this is not useful at all, because price here around about October 2016 broke out of the upper median line, as we would call it. But I quite often do find that it's very useful to double up or double down, depending on which direction you want to be trading in these pitchforks. So I basically copied and pasted another pitchfork, same angle, same slope, on top of this pitchfork. Quite often when you see major pivots or major swings, they do kick off moves. Obviously we've been in a fantastic bull run since this low in 2009, and it's even begun more crazy since this, which was, I believe, an expanded triangle, which ended in April last year, and look at this parabolic shot to the upside. So just doubling up these this pitchfork at the same slope, and you'll see that we had obviously a little bit of resistance there. These lines is what I call my dashed median lines. They quite often help for providing insight if I'm using the right setting on a pitchfork. For those that do know pitchforks, we do get different settings like modified shift pitchforks and also shift pitchforks. So we had some resistance here, some support at this 50% dashed median line. We went up, and then we vibrated, as we call it, and when we had this expanding triangle up by this upper red warning line of the lower pitchfork, which is something you'll quite often see with triangles. They tend to vibrate up and down, fluctuate up and down below these median lines, which is exactly what happened here. We had an A, B, C, D, E, and now we've had this massive move to the upside. Now, the question is, are these lines useful? And I would definitely argue that they are, because price came back, tested this angled median line. It found resistance at that median line, came down, failed to close below it, and moved up again. We had some sort of resistance there. We had a little bit of resistance in March this year. Price went up, it reached now the upper 50% warning line, or the dashed warning line angle. We had some resistance there. We've then moved higher, and we're actually approaching an area where I believe we could set a major high for this year. If you've been watching the markets, I think the Dow shed something like 800 points the other day. But the market's recovered pretty well, and this is now on a weekly. And, you know, everything COVID related these days seems like they want to be blaming things on COVID. It's like there's obviously a lot of worry about COVID still, the Delta variant, etc., etc. And as soon as there's a little bit of a sell-off, everyone goes into panic mode and they think a top is in. Well, for me, I don't think a top is going to be likely until price actually reaches this upper line. And this line is currently lying around about the 4,480 level. This is obviously following the ES on a continuous future chart. So this little decline we had, this is not on a weekly, obviously. Let me just go to a daily. Very nearly, we could argue, found support at these previous highs and almost touched this upper 50% dashed line, and we're now heading higher again. That's not to say, though, that this move is over. It certainly looks like, if you look at all the other moves, that every single time people think things are going to collapse, the price and market just recovers again. It does currently look like we're just going to make new highs. It could very, very easily set in a lower high here, lower, low, lower high, and then move lower. But I am still of the opinion that we can still head higher. I think we can still gravitate towards, like I mentioned, the 4,400, 4,480, maybe even have an overshot to about the 4,500 level. And then very likely, in my opinion, obviously, maybe even make the yearly high for this year. Now, if that does happen, guys, then I would then afterwards think that we might even go into a multi-year correction. And the levels for me that's important on the ES here is that, sorry, some guys say they can't hear it pretty well. Let me just see if I can change the volume. Is that a little bit better? Let me know in the chat box there. Let me get the output a bit higher. Alright guys, I'm on full volume here, so it should be coming through to your side, okay, I hope. If not, then let me know. Okay, let me go on with the ES. Could easily make an ABC to the downside, but I do think we're in a parabolic blow-off stage where we're going to reach about the 4,480 to 4,500 region. We might even have an overshoot. So I'll be watching this region very closely. If you do get another strong move to the downside, then I think we could easily test the 4,142 level. And for me, the line in the sand for this year is that if we break the 4,052 towards the 4,027, 25 odd level, then I would say we've got a strong top in for the year, and that we should watch out and be careful of any more longs. I think we're definitely going to be going into a long, drawn out, and possibly a deepish sort of correction. Right, that's my view on the ES. Dollar index, very important market to watch if you're trading the Euro US dollar, the Pound US dollar, the US dollar Japanese yen, and all the other basket trades that form the dollar index. These are lines that I've had on since last year as well. I'm currently viewing the bounce that we've had, and this is again set to a weekly. I'll drill down to a smaller time frame as corrective. And I do not think that the dollar index is done going down. A lot of people are going to get their hopes up and think that this is going to go much higher. They might be right. In my opinion, I'm viewing this as corrective. Let me just go to a daily time frame. And one of the reasons why I'm saying this is that since this low in January this year, we didn't have what I would say a 5-wave move. Yes, you could argue this was a 1, 2, 3, 4, 5. But if you know anything a little bit about Elliott wave counts, then you'll probably know that your third wave should never come into the area of your first wave. Now, where was this first wave? I'm currently thinking that we've probably had an A, B, C, X, A, B, C, or an A, B, C to the upside. Price then failed to break this low, and now it's moving higher again. So whether I'm right or not, that remains to be seen. But in the bigger picture scheme of things, I don't think that the dollar index is over the short term done going up. We might see some minor corrections in between. But levels that I am interested is probably at this upper median line of a shift pitchfork. Let's color that in red. Let's just change the opacity a little bit lighter. Here we go. Get out my path tool. So, what are we seeing? I'm thinking this might have been an A B that failed to break this low. Price, I think, is got a standing good chance, and it's nearly done that, to break this high, which is, let me just put a horizontal ray in there, at 93.43. So, if price breaks that high, we also have this upper median line and the zone that I believe price could move towards. Quite often you'll find that after an extended long run, when price breaks highs, I'm going to show you this in Crude, which is a fantastic example, that it would break these highs, probably pip it, reach this upper median line, and then we might see a reversal. Now, how soon we're going to get there, I'm not sure, but I think that the slower we grind up towards this high, the stronger indication it might be that this is running out of steam and that we could see a reversal to the downside. Now, this is a shift pitchfork. If I switch that to a modified pitchfork, it brings that line up a little bit higher. I'm in two minds as to which one to use at the moment, but just to let you guys know, what I'm seeing here could also very well be the start of an ending diagonal. And again, guys, on a weekly basis, when we continuously look at these things, or these markers that I covered, we can obviously relook at them and check out how market structure has changed in the week in between. So I'm currently viewing this as a very large correction. That being said, if we, for example, do not break this high and we start moving lower again, then I'm going to be switching to the idea that we might even be seeing a very large triangle. But for now, I think there's a very good chance that price will test these highs that were set in March and break it. And if it does so, obviously, and together with a pattern which might even be an ending diagonal, then we could see an aggressive move to the downside. The slower this takes place and the slower it grinds to the upside, like I mentioned, the bigger chance we got that if it does reach here, that we're going to get a reversal, in my opinion. Gold. All right. Let me just chart the dollar index versus the gold for you guys. And you'll see that there's some correlation, obviously. So once you have a strong, or let's say a weak dollar, then generally your gold would rally. And obviously the inverse is true of that. Also, we obviously taught when you do start trading, if you do follow the dollar index, and the inverse correlation that it has to gold generally. So with my members, we've been watching this move lower from last year, August, and it was an extremely messy move. We had a clear triangle over here after this first drop, that after this high in August. This was a clear triangle. We were thinking we probably had an A, B, C. That could have been the end of it. It didn't happen. Price went up. So as soon as you see an ABC fail, and it would have failed after it broke this low over here, you'll have to switch to a secondary correction pattern that we follow quite often, which is a double zigzag. So we thought it was an ABC. It failed to go higher. That was an X, I would label it. And it is still viable to be an X wave, because price did not at this high break this high here. Obviously, there's going to be a lot of people and eloticians that disagree with me. That's perfectly fine. And that's why I do use market geometry to guide me into areas where I want to trade from. But a general sort of consensus was that we had some correction that ended over here. We then had a very strong impulsive move to the upside. And this recent drop that we had that ended in June also ended at a center median line of in this case a modified pitchfork, if we used those three anchor points. Not to say this is going to keep or be the standard pitchfork to use, or the pitchfork setting to use, should I say, but my thinking is here at the moment, by just glancing at what the dollar index is doing, is that if we're going to grind into a high and reach this area and see a reversal, then gold might still come down a little bit, and then we're going to see a move to the upside. That being said, after such a strong bullish move that went to all-time highs, and that move that obviously started here in December 2015, and this bullish phase that started in August 2018, was extremely strong. So what I'm currently thinking is that we have a third wave high here, and that this is going to be a long drawn out sideways movement that might have ended. So I'm not going to trade gold for the time being until I'm watching what the dollar index is going to do. If it reaches these levels and we're going to start seeing some strong reversal signals, it will probably be worth tracking that on a daily time frame, maybe even a weekly time frame if you want to be a bit more conservative. And if you have some sort of lower lows, lower highs, and then a trend forming that forms downward with lower lows, lower highs, quite possibly on a daily. If you want to be more conservative on a weekly, then I would say gold would probably be getting ready to go up again. So with the dollar index, it might still move higher. The gold might fall a little bit lower still. And one such thing that gives me that sort of thinking is that we had a clear 1, 2, 3, 4, 5. Massive impulsive move, which is generally how a third wave would materialize, followed by a fourth wave and a fifth wave. Now, whether this is an A, B, C, that's going to break this low again, that remains to be seen. That I can't tell you. But I'm just going to keep a close eye on what the dollar index is doing. And my opinion is that while the dollar index can go higher, we could probably slide a little bit lower on gold. Alternatively, we could go a little bit higher in gold, and the dollar index could fall from here if this turns out to be a triangle. But for now, you'll very often find that prices are gravitating towards these lines. So while the dollar index goes up, I think that gold can either run sideways or even come a little bit lower. Crude oil, guys. If you've been trading long enough, like I have, crude oil went actually negative. This is on spot price using a CFD chart. It actually went minus almost $40. Now they just have it as a zero here on this chart. Price then rallied all the way up, and it just pipped, and this is what I'm talking about, prices reaching previous highs. It just pipped these highs, and obviously went above this one, which was a higher high, higher low, a higher high over there. It pipped this high that formed in October 2018 by a fraction. Let me just zoom into that a little bit, and immediately reversed to the downside. Now, question is, we've had what could have been a 1, a 2, and a strong 3. Price has reached this upward sloping standard pitchfork that I had in my charts for a while. It reached the low red warning line, is now bouncing higher. What is important to watch here is these set of lows, the closing prices of those two lows there and that low over here, probably between the 70.71 and the 72.10 levels. A strong move above this will have me think that this was just an expanded zigzag, which are quite aggressive in nature. They quite often would be an A, B, C, but I'm currently treating this as a very strong top that ended this bullish cycle starting from March this year. Obviously, it's been in a longer term bullish cycle. There was one here, one there, and another one over here. We also reached the 1.618% extension of whatever this was. Could have been a leading diagonal, and it just pipped that to the T, and the previous high showed you, and price reversed lower. So I'm currently treating this. Let me just have a look. As a potential 1, 2, 3. If this is a 4, it would need to stop not higher than this zone over here and then move lower. And that could very easily then be the first initial wave lower of a much larger degree decline or correction. That being said, I'm going to treat whatever happens here as a correction. And you might say, yes, I say this or that, but I think we're too early stages to say that is going to be an A, B, C. It might very well be a long, drawn-out triangle correction, but I do think the possibilities are pretty high that we've put in a important high for this here. But saying that, very important that we watch the 41.60-ish level till about the 42.20 level. If price does move above that, then we would treat this as an ABC with another high to follow, and I'll still then be looking for a correction to the downside. I do think that crude oil has either topped or is very near to topping for the year. All right, guys, so that concludes my analysis. Oh, sorry, natural gas, before we get to some questions. Guys, natural gas, very interesting. I've got two pitchforks going on here. Let me just move out to a larger time frame here. I'm not saying, well, let me put it this way. If we run a pitchfork using the 3 recent swings, major swings, which would be this low in March 2016, second anchor point in November 2018, and then the 15th of June's anchor point, or sorry, let's say June, because it's a weekly chart in 2020, and you slope an upward sloping standard pitchfork, we got a center median line round about there. I'm going to talk about prices very soon. Then we had this move to the upside. Now this to me looks like an ABC, which failed to then move down. I don't think this counts as a 1, 2, 3, 4, because the fourth wave would have come into the area of the first wave and then up. I'm thinking we're seeing an A, B, C, X, and potentially an A, B with an extended C wave that might be nearing completion. That being said, guys, very often you have an idea of what could be happening and you think, oh, let's enter somewhere over here. I'll talk about this zone right now, because we've got a confluence of different angles of pitchforks that confluence around about this area over here. Quite often you'll see price, when there is a confluence, move towards, and if it does get correct or rejected from those levels, that would be the signal that you should start looking for a short. And that's anyway what I do with my members. So I won't just get short within an area. I do need to see the market react from that area. It needs to be reactive rather than predictive in nature. So we can predict where market might be moving towards, and generally price will be drawn towards these lines. And where you see a confluence of multiple lines, quite often you do get a rejection. And if you do get a rejection, you get into a trade. So I'm currently thinking that this might be an ABCX ABC. Even if I'm wrong about this, price might extend a little bit above this. But if I do get a reversal from here, I'll probably be looking at shorting this market back towards these highs of 3.425 or maybe even lower. Let's talk about that zone quickly. Let's go to a daily chart, daily time frame. The zone is pretty wide at the moment, and we recently had a correction here, which I thought was just an ABC. This might as well have been a 1, 2. We have a third wave up, maybe another move down, another one up. We want to see price slowing down into this sort of area, and actually I should update this a little bit. And let me put a label in there for you guys. We're going to look at the $4 to around about the 415. Let's call it 420. It's a little bit wide, and the reason why I'm saying that is that the longer price takes to get to these lines, they do slope up. So obviously the price is going to move up and up and up by the time price does reach that. So what we want to see is a move into that area, followed by a reversal. And I do with my members follow reversals, candlestick patterns. And we also have another type of entry condition that we use that we call the velocity hook setup, a bit more of a conservative one, which I'm probably going to be using in this case, because I first want to see a reaction from that area. So that's my opinion. I think that natural gas is going to be close to a reversal. Again, might be wrong, and we'll definitely have a look at this market again next week during our next live session. All right. Guys, we're about 26 minutes in. I think we can spend about 5 minutes here to answer some questions. That's what I have to show you today. Again, guys, this is the first live session that we do. Obviously, we're going to get better at this as we go. You know, if you guys are interested in me looking at some of the charts you want to look at, you know, maybe ask some more questions about market geometry, then we can definitely take that up in our next sessions. Also, if you guys are new to this channel, then please subscribe, hit the like button and the notification bell, and then we'll be happy to have you guys on board. Obviously, the more interest there is with this sort of analysis, the better it is for all of us. Okay. We have a question from, is it Gamaliel? Sorry if I'm not pronouncing your name right. Would it be advisable to add, say, 200 SMA smooth moving average for further concerns or confluence? Gamaliel, definitely. I do quite often find that obviously a lot of traders do watch these, either the EMAs or the SMAs. And in my line of work, I quite like to trade the end of correction. So obviously you want to see where a market's moving towards. You formulate a bias. Let's say you think a market is bullish, and then wait for corrections. And then quite often, as you probably would know, that corrections tend to turn towards one of your EMA or SMA lines. And quite often you'll find that they do confluence with some of your market geometry lines. You've probably seen that I've done some pretty large time frame work here. I quite like to have larger time frame analysis using my market geometry on my charts, so I am aware of where these lines are. We recently had a member that took a trade. I'm not going to mention his name, bless his soul, but he took a trade, and afterwards he said, now why did this trade fail? And I had a look at it and simply just went on a weekly chart, drew in some market geometry lines, and it just so happened that he took a long position going straight into a center median line, and that he was unaware of where these lines were and had a massive correction against his position. Eventually the price recovered, and yes, eventually he was right about direction, which is one of these things that happen with trading. We tend to be right about direction eventually, but you know, when it all comes to entering a trade, obviously you want to get into that sweet spot where your risk is at its lowest and your profit potential at its highest, obviously not trading into resistance areas, which is why I use market geometry, and especially over corrections. If you use especially your standard pitch, or sorry, your shift pitchfork setting over correction, you know which corrections tend to materialize and how to track them using my techniques, then you stand a very good chance to identify zones where these corrections will most likely end before a trend continues again. So that can be quite predictive in nature, but like I mentioned before, we don't just want to predict or forecast. We want to say, okay, market's going to move to this area. If we then do get a reaction, then we want to trade it. And that's pretty much the basis of how we tackle our trades. Then we have JFAG Black Trading Signal. Thank you for this. You're more than welcome, sir. Mike, thoughts on silver? And then I'm going to end off this session. Let's quickly have a look for Mike. Silver has reacted much stronger than gold has to the downside. And with my members, and this is pretty interesting, is that we've been following an idea that this might be a very large triangle that is currently forming. We had this sort of a buy area that we thought price might find support at, but it subsequently broke below that. I'll be very, very careful with silver at the moment, Mike, just because of what's happening with the dollar index still. I'm actually thinking about a time window, about 3 weeks to a month, that I would like to see the dollar index grind higher. And as long as that continues, your gold and your silver will most likely continue lower. This is not to say that this is a triangle. It was just an idea. We are at a level where it either needs to find support right now for me to consider this still be a triangle, and an E wave for a triangle, and that's at a 0.786% Fib retracement. But I'm also counting a 1, 2, 3, 4, 5 here. So I'm really starting to question whether this is an A, B, C, D, E. I wouldn't be surprised if this was a B and we're still busy with a C wave. It almost seems like, you know, we had most of the big moves happen this year thus far, and that we now are just sort of like hanging around waiting. And I think both gold and silver is going to frustrate a lot of traders for a few weeks to come still. So this A, B, C, D, E triangle idea, I'm not sure about it anymore, and that's perfectly fine. You know, and silver's also been a bit weaker than gold has been, to be dead honest. So let's see. I will have a look at silver. We'll mark it on the board. Let's have a look at it next week again. You know, there might be a move in between or so, but you know, generally waiting a little bit longer can sometimes be a good thing, especially when you trade these commodities. So you have a bit of a better view of what might be happening. Right, guys, I think I'm going to end that there. Thanks very much for attending today's session. Like I said, if you enjoyed today's session, hit the like button there, and hopefully I'll see you guys next week again when we do our next session. We'll go over some of these markets I covered today, see where things stand, and then also have a look again at silver, and I'll include silver. I looked at gold today, but let's include silver as well. I know a lot of guys are interested in that. Right, guys, and that's it for me today. I think we'll stop it there. Until next time, this is Richard K from Price Action Income. Goodbye.